So hello to you, welcome to Money Markets and More from a rainy autumnal Glasgow. Today's piece is called The End of Cheap Money. Is this finally it for UK house prices? Back in 2007, comedian Susan Murray phoned me up with a question. She was just arranging a new mortgage and she wanted to know where I thought interest rates were going. Should she get a fixed or a variable rate mortgage? I couldn't make that decision for her, of course, but I could see that there were underlying problems with the economy, quite serious ones. So the safest option, if it was affordable, seemed to be a fixed rate mortgage. In the event something goes seriously wrong in the broader economy, at least she was protected against spiralling interest rates. So Susan went and fixed her mortgage at 6%, and it turns out it was pretty much the top of the market for mortgage rates. They duly plunged as central banks slashed rates and then printed money following the financial crisis, and she has never forgiven me. Cost me a ruddy fortune, that bloke, she always complains whenever my name comes up. Now, I may have seen 2008 coming to an extent. I was such a massive gold bug at the time, but I did not foresee quantitative easing nor the extent to which interest rates would fall. Money got so cheap. By September 2021, barely a year ago, you could get a 5-year fixed rate deal for 1.3%. It seems inconceivable today that money could be so cheap. To be fair, it seemed almost inconceivable at the time, and no wonder so many people levered themselves up to the eyeballs. Now, I've long argued that more than anything, it is cheap money that has driven up house prices. Everywhere you look, the standard solution to unaffordable housing is that we need to build more, especially in and around London. But London has been a building site for a decade or more. Goodness knows how many new build flats there are, but all that new build hasn't brought prices down. And I'm forever quoting this stat, but between 1997 and 2007, the housing stock grew by 10%, but the population only grew by 5%. If house prices were a function of supply and demand, they should have fallen slightly over this period, but they didn't. They rose by more than 300%. Then you see that mortgage lending over the same period went up by 370%, and you quickly realise it was newly created money that pushed up prices in a decade of loose lending, a decade which gave birth to the national obsession that is house prices. Houses were no longer places to live, but financial assets. If you introduce, it's got very windy, but I've got my windjammer, don't worry, so it should be all right, but even so, windy. If you introduce new debt into a market, the higher prices will go. Look at student loans and education. Mortgage lending doubled again in the 10 years from 2009 to 2019, and house prices rose by over 50%, probably more than 100% in London. If you cut off the tap that is cheap money, house prices will quickly come to levels concomitant with earnings. The two have long since been distant friends. In 1995, the house price to income ratio was below 3. Even in London, it was only just above 3. Now it's 7. The average house is 7 times average income. In London, it is 11. 11. And we wonder why families have got so small. With inflation spiralling, bond rates rising and the US dollar spiking, money is suddenly not so cheap anymore, and it's getting more and more expensive. The UK is not alone in this, by any means, but the problem is more acute here because our economy is so geared to house prices. The Bank of England, my favourite institution, has made an absolute mess of protecting the currency, declaring it will not hesitate while hesitating. And rather like the way it broadcast its gold sales to the market between 1999 and 2002, thereby sending the gold price to all-time lows around $250 an ounce, so did it broadcast its gilt sales and its quantitative tightening. And that that particular market plunging too. The announcement sparked the sharp sell-off in gilts that began the day before Chancellor Kwasi Kwarteng's mini budget and then carried on after his budget. God made it even worse, and it's as though the two departments, the Treasury and the Bank of England, don't communicate or coordinate. Now, the trigger may have been the Bank of England's announcement, or it might have been Kwarteng's budget. It kind of doesn't matter. Whatever. The cause is over 10 years of quantitative easing, zero interest rate policies, and all the rest of it. But it's interesting though, at the first signs of panic, they started printing. That tells us where they will go in a panic. And last week I would have said that interest rates are only going to go one way from here, and that means that the cheap money taps that drove house prices to such unaffordable levels are now being turned off. And lenders clearly felt the same way. I gather something like 900 mortgage products were removed from the market in under 24 hours. And that smashed the all-time record, which was around 400, set during the COVID panic. But then the Bank of England started printing again. So the UK housing market, particularly in and around London, has been an irrational, insatiable monster for decades, and anyone who called the top has ended up with egg on their face. But we are levered up to the eyeballs. It's not just a matter of no more cheap money coming in, there is also the other side of the coin, something I sort of remember from 89 to 93. When people can't make their interest payments, they start to sell. If house prices come down 10 or 15%, it's often the case that the house becomes less valuable than the debt against it, and negative equity strikes. Now, broadly speaking, the optics weren't great, but I like Kwarteng's budget. I think he's made the right choices. Cutting taxes is good, but a falling housing market, no matter how much growth there is elsewhere, will see the Tories kicked out at the next election. How do they prop up the housing market without cheap money? I'm sure they will find a way. They always do. Or will they? Now, if you're worried about what's going on and you want to buy physical gold and silver, as I keep saying, my recommended bullion dealer is the Pure Gold Company, with whom I have an affiliation deal. I will put a link somewhere on the page or in the description and in the comments. If you came to see my show, How Heavy, last week, thank you very much for coming. Everyone seemed to enjoy it. 2 really good nights. Thank you very much for watching. Please subscribe to the channel. Please subscribe to my Substack, and I will be back with another video very soon. Thank you.